Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Happy Friday. It's Friday, January 27th. Wow, this month is going by really quick here. Hey, we do got some important economic news releases to go over today, so we'll jump right into it. We'll start off with the GDP. This is the final revision of the fourth quarter for GDP, and as you can see, it disappointed. So the previous one was at 3.5%. The forecast for the final revision was supposed to be at 2.2%, and it dropped way down to 1.9%. So fourth quarter was horrible at 1.9. This is the lowest we've seen in the last 5 years, so since 2011. The sad thing about it is that 2016 overall GDP is actually lower than what we had in 2015. So the economy, in essence, basically slowed up in 2016. Compared to even keeping level with 2015 or increasing. So obviously that's not going to be good news to the investors out there. Also, we got the durable goods orders for the month of December. So we had negative 4.8%, pretty big drop there in the month of November. So forecast was supposed to go up to 2.2, and I've even seen some people forecasting at 3%. And it came in for a second month in a row, another negative. It dropped another 0.4%. Once you take out the big ticket items, like Boeing and the airplanes and stuff like that, we got stuff like the core capital equipment orders, and we had a 1.5% the previous month, and then for the month of December, it only went up 0.8%. So again, not great, but better than obviously what the durable goods orders looks like. Last but not least, we had a previous. We have two versions in the revisions. Numbers in consumer sentiments. We had one earlier on which came in at 98.1. Forecast is supposed to go up a little bit to 98.2, and it came in a little bit better. So people are feeling a little bit better in January about where things are moving. So it came in at 98.5. So obviously, with all the good news, the euphoria kind of going on after the election, people are feeling a lot better in January as the month moved on. Let's go ahead and take a look here. Stock market's down. Of course, they didn't like the GDP number, or obviously the durable goods orders numbers didn't come in. Also, last night we had some big ones coming in with reportings, and today Google missing estimates. Microsoft did make it, and then one of the other big ones, even like Chevron, I think missed on some estimates. So some of the big players missed on some of their estimates, and that's on top of the data. That's what's kind of bringing the stock market down a bit today. Bond market, as you saw late in the day, we were way down, and we were testing the second floor here, which if we broke below that, we had a pretty good possibility of dropping way down to here, another approximately 70-80 basis points. We could have dropped further, but instead we rallied and actually closed up about 6 basis points. We closed up, so, which was better than what we left off the day before. Today, however, we're up about 16 basis points than where we left off yesterday. So this gives us better pricing from where we left off yesterday. We didn't have any price changes yesterday, and a lot of that price improvement will go into today with on top of the improvement we are seeing so far this morning. And the good thing is we're looks like we could be going above this floor of this floor here if we can close above this. But the things to watch out for, we got the 10-day moving here, we got the 25-day moving average, and we got the 50-day moving average right here. And some of these have been kind of beating us down a little bit further, and with the 10-day moving down further, this one hasn't been as much, but this 50-day moving average might be a little tougher for us to break above. So this could be short-lived. We may only over the next few days touch above this, reach up this point and get pushed down further. So just be very cautious over the next few days. If you see the bond market reach up this way, you may want to look at locking if you have any rates floating out there. If you're refinancing or if you're an escrow or anything and floating your rates, whether it's purchase or refinance, you may want to kind of lock in and make sure you got that better rate or that better pricing at that particular day before it gets knocked down possibly. So obviously rates are going up. Next week we do got the Fed meeting next week. We don't expect any rate hikes at this point, but it could give us insight as to possible when the next one might be. And the next one possibly could be even March. So stay tuned as to any announcement for when, or any looks into into a possible rate hikes going in the future. So remember, Fed did anticipate there could be at least 3 this year, and March could be the first time up this year to see another rate hike. So anyways, folks, if you guys want more updates throughout the day, just stop over at Twitter. You can find me underneath Mike Bjork here, and I will be updating throughout the day. I hope you guys have a wonderful day. Thanks so much for watching. We'll see you guys on Monday. Take care. Bye-bye.